Hi, my name is Brian Birch. I'm an independent contractor. I work a lot in insurance and currently on the IFRS 17 area. I've just heard about half an hour ago on LinkedIn that there will be a delay of 1 year to IFRS 17. Now, what does this mean for insurance companies? I guess it depends on where the insurance company is in terms of planning. Some will have started, some will have be making software or buying software. They may continue on with their plans, and other insurance companies haven't started yet. So it's worth understanding where you are in the process and understanding, do you need to reprioritize or start from now. If you haven't already started, there is still plenty to do, and that's my overall message. There's a huge amount to do on IFRS 17, so even with delay, you should keep going. It takes time to buy software. It takes time to understand it, to evaluate it, to possibly do a proof of concept, to understand your own requirements, evaluate the software as whether or not it does what you need, run your own numbers through it, and understand, does it fit into your IT architecture. The IFRS 17 work may fit with finance transformation, and the delay may help that or indeed hinder that. So the various work streams of the wider program, if you have a wider program, will need to be prioritized according to the current situation. For some stakeholders, they will now want to use the time to improve the quality of what is produced, make sure the accounting numbers and the actuarial numbers are correct, and to make sure that the processes are right. For others, they may be tempted to use the delay to start the project later or keep it at a lower pace for a while. As I said, there's plenty to do, and getting the stakeholders to agree and getting the budgets together is part of the challenge of the project manager. As regards software, will some software providers catch up, and will they produce more? Is it worth waiting for that? Or do you buy it and implement it and get further with the implementation because of this delay? Indeed, will it be a strain on some software providers to potentially have later sales? So there's a variety of things happening there. Do they need firms to take it on early and start paying during an implementation and an evaluation period? There's a few aspects on what will work, but potentially software providers will have more time to do proof of concepts, and that could help the insurance company. Also, it's important in IFRS 17 to know what reports are needed for the insurance company, how you want to see your CSM, how you want the insurance contract liability broken down. All of these things will need to be planned, designed, and implemented. And if that hasn't started yet, then using this extra time will be helpful. So the timelines may be affected. If you're also doing a finance transformation, it takes potentially 6 months to buy and evaluate software. It could take a year or a year and a half to actually implement the software, as well as do all the other process changes that are needed. That would take us up to the end of 2020, which would give us 2021 to actually use the processes and systems and the ways of explaining the communication methods to be able to explain what are the changes for your business with your real data using real software and real processes. There's a learning curve there that could be very valuable, so that you don't arrive in 2022 and have not practiced and fully tested the software and processes. So IFRS 17 and finance transformation, again, there may be some trade-offs, there may be some reprioritization of this. Does everything fit in? Is the accounting viable? Does it all fit into your IT architecture? And getting stakeholders on board. So there are multiple different aspects of this that need to be understood. IFRS 17 itself You still need to think about paragraph 100, the contract liabilities, 101, the building blocks of those reinsurance outwards, splitting that out, splitting out the assets and liabilities, new business, some of the things that you need to be able to understand and disclose. You need to be able to understand where you're going to get the data, how it needs to be processed, and also be able to do this for every legal entity. Presumably you need that for internal reporting, product groups and portfolios according to the IFRS 17 way of doing things, but possibly other ways internally for management accounts to be able to understand things. Thinking of US GAAP or other GAAP, do you need to be able to walk through different generally accepted accounting principles, different ways of doing accounting to be able to understand your accounting in a broader sense? You need to be able to understand how the profit is affected by IFRS 17, or the balance sheet is affected by IFRS 9, and how the capital is affected by Solvency 2. These are some of the numbers that you'll be producing, so you'll need to understand how management information and management decisions affect these items, and this could take a long time to understand, plan, to design, and to implement, and to get right. Also, what reconciliations are needed, what numbers need to be right, how numbers fit together, if one number changes, if an interest rate changes, if you add or take away a product class, or what actually are the impacts or expected impacts for that. You'll need to be able to do multiple currency and possibly multi-GAAP, as I said. There may be audit requirements to understand what your auditors will need, what sort of sources of information they will need, and to be able to get the reports in a reliable way, in a way that the auditors are happy that they can sign off the accounts. From a project manager's point of view, there are still loads of milestones and timetables, buying the software, understanding the design and the processes that will need to change, hiring people, implementing all those things, getting the software connected, fitting it into IT environments, then testing and evaluating and running the processes in specific functional or process ways, or the overall process, and making sure people are up to speed both in terms of training, and also stakeholders have their expectations managed and ultimately met. Roles, there are roles for project managers, process improvement people, business analysts, accountants, actuaries. There are quite a few roles in IFRS 17, lots of IT roles to understand the data and understand the processes and the systems. So getting people in place for that is important. There are all sorts of issues that can crop up, from things that don't fit to moving on as well to dependencies. At least now we're clear about whether or not there's going to be delay, so that can help. And if there are issues that that you can't build your software, or the software you want it can't do what you want, then what are you going to do about that? Is there a manual workaround, or are you potentially getting different software and adjusting the budget? There are all sorts of risks of not getting the people, that the data is hard to get, that the processes and software won't work. So it's important to think through those and have time and budget available to deal with the various risks that can happen. Dependencies, or maybe dependencies on finance transformation projects, on IFRS 9 projects, on getting the software, on finishing the software, or even just understanding one's needs. Stakeholder aspects and resources. Stakeholders need to be brought in, and for the right people to sign off budgets, to point the whole project in the right direction, to take on a sensible chunk of finance change on IFRS 17. And another aspect of this is there are an awful lot of international stakeholders. Potentially you can have lots of different countries with different stages of progression in IFRS 17, and whether or not they need to do modest enough changes, or actually wholesale very deep changes to deal with IFRS 17. Also resources, the people you need to implement IFRS 17. There'll be permanent people, there may be contractors, and there may be consulting firms. So the mix of those may get you a different set of costs and quality and availability, and managing that and managing the risks associated with those can lead to a great outcome where you've got the right people doing the right thing, or a team that's disjointed and could have an effect on the overall timeline. On the people side, another aspect really is people can use it's insurance, and it's a new area for a lot of people. So people can end up using the same terms for different things, or different terms for the same thing. That can lead to some frustration, some lack of clarity, and that could lead to technical difficulties at a later stage if somebody thinks something is covered and it's not actually covered. IFRS 9, understanding how your profit and loss and your balance sheet move with IFRS 9 or any other accounting system that approach that you're using can be very important. So if all of this is overwhelming or daunting, or indeed you're in progress, it is helpful to understand where you start or where you go from here. Understanding IFRS 17 will help enormously. Understanding the parts of it that are likely to affect you, understanding the model, the PAA or the General Measurement Model, or VFA, understanding the impact or relevance of these on your reporting will help an awful lot. That will help you understand the likely challenges, and then you can start a gap analysis to understand what needs to happen and get the budgets right and get the people in. Hope this has been helpful. My name is Brian Birch. I'm an independent contractor, and I want to make some notes when we've just heard that IFRS 17 has been delayed by a year.